Welcome back, everybody. This is another No Money Real Estate podcast. And I'm really excited about the show today because I've got a dear friend of mine. His name is Steve Mills, who's going to join us in a second. We're going to do two things. We're going to talk about a really awesome flip that he just did. But this guy has 20 years of experience in real estate investing. So we're going to pull some general knowledge out of this guy right after this. Hey, my name's Ken, and I'm a real estate investor. I want to welcome you to the No Money Real Estate podcast. On this show, to interview elite level real estate investors from all over North America. And I'm going to help you to see one thing that all successful real estate investors have in common. They built their portfolios without using a dime of their own money. I've got a portfolio of $300 million in real estate. That includes resorts, apartment buildings, commercial buildings, and I've built the entire portfolio without using a dime of my own money. Real estate is a business that anybody can get into, but the strategies that those tight real estate investors use to build massive portfolios have been kept secret for decades. Now, because of this show, I'm going to reveal them to you. So let's get started. All right, welcome back. Good to be here. And friends, this is Steve Mills. Steve, good to have you here today, brother.
Ken, how you doing? Happy to be here.
Awesome. I'm glad you're here. Hey, listen, let's jump right into this. Lately on the podcast, I've been talking a lot about flipping properties. And you know, I really believe that we're on a mission to get as many people into real estate investing as possible. I don't like the way governments are handling the housing crisis. And I believe that the more people you get into it, the more the chance we have of more houses being built, et cetera, et cetera. And one of the most important ways, I think, and of course it's risky, we'll talk about that, but I think people should get into real estate investing is to try house flipping. And I've noticed since I've been following you that house flipping is always something, it's kind of like an opportunity of target, like a target of opportunity, if you will. But you've done a few flips in your time. And I'd love to hear your thoughts. First of all, do you believe that house flipping is something that would be a good starting point for folks? And what makes you think that?
Yeah, no, thanks for having me on. Yeah, no, house flipping, I think anybody that's kind of thinking of real estate investing and doesn't know where to start, house flipping is probably, I think, absolutely has to be the place where you first put your energy and your resources in. For most people, if you're able to actually live in the home too at some point, or live in the basement, work out, fix up the upstairs and flip it over, you deal with the other benefits there. I know a lot of people have done that. I've done that before. I know you've done it, Ken. Like, it's a great way to actually build equity so you can save up a little bit of down payment, because the hardest thing for people nowadays is, geez, how do I come up with 20%, let alone maybe even 5? You're looking at $50,000, $100,000. How do I come up with that? And house flipping is a really nice way to actually get some equity to be able to use to get into bigger properties down the road.
Man, you're going to take me off in a different direction for sure. But before we get into the details, tell everybody a little bit about your background. I know you're a real estate agent, you're a developer, you've got some big projects going on. Let everybody get to know Steve a little bit.
Sure, yeah. I've been a real estate investor for, I guess over 20 years now. My background was more capital markets. So I used to work at the Toronto Stock Exchange for 10 years, help companies raise money. So going public on the exchange, raising money, finding shareholders. I always loved real estate. Like everybody, I think we all lose money in the stock market once in a while.
Yeah.
Never lost money in real estate. So I decided to dedicate full time looking for long-term properties, whether it's multifamily properties and the occasional flip here or there, if you can find something that's strategic and where the numbers make sense. So background for me is, yeah, full-time real estate investor, also full-time realtor too, and mostly work with investors finding real estate.
And what's your portfolio look like right now? Because I know recently we were talking about a development you're doing in Niagara, but you've also bought a couple apartment buildings out east. I mean, what's your general thesis on what you want to hold in your portfolio and what do you have?
Yeah, so from a portfolio perspective, multifamily is always I think, long-term goal. If you can kind of get into some cash flowing long-term multifamily properties. The flip properties are nice to be able to add in equity when you can. But long-term, if you can find properties that are cash flowing and you can increase the rents, increase the property, bring in new tenants, and then long-term wise, I like to buy stuff once and then not sell it if I don't need to, whether that's a BRRRR and refinance and take the money back out of the property where you can take it out tax-free because it's a loan, or keeping it long-term and just cash flowing off the investment as the portfolio and the passive appreciation grows as well.
All right, let's first talk about the flip you just did. Walk me through the details of that. And then I want to talk to you about something you just mentioned, which you're absolutely right. The only way I buy houses for my family is old dilapidated houses that I can increase the values. We'll finish with that. But tell us about this property you just flipped, how you found it, how you renovated it, the money you made.
Yeah, so for this one, it was interesting because it was actually in my neighborhood, so just kind of down the street. So know the neighborhood really well because I'm a realtor as well. I know what prices kind of go for. I knew this was an estate sale, so I knew the previous owner was there for 40 years and they ended up passing away. And the estate essentially just wanted to sell the property as quickly as they can. So they were willing to let the property go at a below market value. Typically with any flip, and you preach this all the time, Ken, is when you get it appraised, you get an appraisal as is, and you get an after repair value appraisal done at the same time. In this case, the property was purchased for just over $1 million, and the as is appraisal was 1.2. So I knew right away that I was
Nice.
able to actually make money. It was one of those things where the numbers are telling me it makes sense, but you get the third party qualification that says, yes, it does make sense. Now, the after repair was even higher, it was 1.4. The market was still kind of slow the last kind of 2 months. It's starting to turn right now, just in December now. But so we had to sell it less than that, but we still were able to make money because we were able to get the property at essentially about 200,000 less than what it was worth at the time.
Man, it always makes sense if you can get into a deal undervalued. That's huge. And then the other thing I liked about what you did there is you brought your family into it. And so because it was located close to you, I talk about this a lot. I don't recommend people get into doing work in the property unless they're a
Yes.
professional in that area. But you did things that you were very comfortable doing. Talk a little bit about that. Who did you have involved with you and what else did that do on top of making you a bit of money?
Yeah, so the nice thing with this too was I asked the question to I have two teenage boys, 16 and 14, and I asked the question, "Hey, what are you doing this summer?" And they're like, "I don't know, video games, I don't know." So then I was like, "Okay, I don't like that answer." And the eldest, he started doing like window washing business with his high school buddies. Wasn't that successful, but I'm like, "Okay, this would be a great project, one, to teach work ethic, teach things to look for in houses, and how do we do kind of the easy stuff that you can't screw up." Which is painting. I did all the outside stuff myself. I let the professionals do all the drywall and the painting and the kitchen install, all that kind of
Yep.
stuff. But from what can I get the kids to do? Definitely staining fences, how to power wash fences, how to paint the outside of the home, how to help me lay brick stones on the front yard, what to look for when we pick up like nice cedar trees for the front, like kind of the easier stuff, but just to try and get them involved. So it became a little bit like a family flip kind of thing, and
That's
it was
awesome.
nice. So they were able to help out and do a little bit that summer.
And how did they take it? Did they do good work? Did you crack the nut with teenage kids?
So different work ethics for both of them. One, absolutely. The other, yes, the first day was fantastic. Then the second day was a little bit of a push. It was like, oh, okay, yeah, we're painting the house again. Okay, yeah. So it was a little bit of dragging, but they got it. And at the end, they earned some money to do it as well, which was nice.
Hey, a few minutes ago you talked about, and I want to pick your brain about the market itself. And you
Sure.
mentioned as a realtor, you're obviously looking, and I get a chance to hear your thoughts on things quite regularly on our calls inside of the Investors Growth Syndicate. But how are you feeling about the market right now as a whole? You mentioned you're seeing more sales in December. Are we heading to better times? Do you think the rate cuts are the right things? Are they enough? Give me some overall thoughts on where you think
Yeah.
the market is.
Yeah, I guess it depends on their perspective that you're coming from, right? Are you a buyer that is looking for investment properties, or are you a seller that needs to sell your home? The market was extremely slow for the last year and a half for anyone looking to sell their home. And for buyers, it became frustrating because nothing was selling and sellers weren't willing to let their homes go compared to what their neighbors got back at the height of COVID. That lasted about a year and a half. Kind of in October, we've started to see things pick up because of interest rates dropping, because people have been on the sidelines for over a year. At a certain point, if you need to move, you kind of there's only so long you can hold off on. So what we've started to slowly see is a much more increase in volume in sales that are happening in October, November, and now December, just because it's been really slow for a while. As an investor, I think it's a great time to buy a home because not everybody's picked up on that because prices have came down a little bit. Interest rates are cheaper, so it's cheaper to cash flow on a property. but the prices haven't kind of jumped up because sales have jumped up yet. Because you've got some people that have been trying to sell their house for 3, 4, 5 months, and they're willing to take something that's a little bit less, right? So it's a nice little time right now.
Yeah, totally. Steve, you mentioned this at the beginning of the show here about the fact that you've moved into houses intentionally to renovate them and increase the value. We've never talked about this before, and I didn't know you were into it too, but I was just trying to count as we were talking. I just bought my 11th house for my family that I've lived in the last 25 years that my wife and I have been married. And we literally bought a 3,000 square foot bungalow that the day we took control of it, we gutted it. And it's completely ripped apart right now. We're living in an Airbnb because we can't even live in it in the shape it's in now. But the reason I've done this every time is I'm at a place now where I don't really need mortgages because I keep rolling forward that equity, and that equity is tax free. You don't pay tax on that. And it sounds like you've got this figured out too. You've been doing some of this similar stuff.
Yeah, the first major project we did was major was probably about 15 years ago, and it was actually my childhood home. So me and my brother, we lived in a childhood home. It was I guess I got to be careful how much I say, but uh, it was very occupied with things. Let's say not quite a murder house, but it was very occupied. So there was a sense of like, oh my God, we got to gut this place. And when the opportunity came, and we were able to tear it down to the studs, essentially, we took
Yep.
everything out. We filled up six 30-foot long garbage bins, six of them,
Wow.
and the house was a townhouse, 15 feet wide. So you can imagine how much stuff was in there. But me and my
Wow.
brother John, we brought it down the studs. We thought we were going to renovate it all ourselves. We didn't know what we were doing. We demoed it ourselves, got rid of all the garbage ourselves while we are both working full-time jobs. But at the end of it, we were just like, oh my God, we bought all like the ductwork from Lowe's, I remember, or Home Hardware. And then we thought we were going to install it all. And then we actually brought in a professional to tell us what we should do. And they're like, you're doing it completely wrong. And we looked at each other like, what are we doing? We had to hire professionals at that point to do the proper stuff that we don't want to screw up. We don't want to screw up something in the walls. We don't want to screw up the plugs, but we were able to do everything else that we couldn't make mistakes with. But similarly, it was a good opportunity to take something that needed work and then add the value. And because it was a childhood home, there is the tax-free benefit once it's sold as well. So
Yeah, like every house I've moved into, I think back to the first house I bought in Ottawa. It was a big farmhouse out in the country that a guy was building, and for whatever reason, he stopped halfway and didn't finish it. So I bought it for 280 grand, put 100 grand into it, lived in it for 3 years, sold it for $1 million. So that extra $600,000 in equity, which for me to have 600 grand, if I would have made it through my job, I would have had to make 1.2 million to end up with 600 grand. I
absolutely.
don't know of a better way to accumulate wealth than doing things like that.
Yeah, I would say the government does not give us many things that are tax-free. The one thing that they still do is equity in your principal residence. So if you're renting right now and you do have an opportunity whether to buy something that's undervalued, I mean, I'm working with a few clients right now to try and find those particular type of properties, then absolutely, because if you're living in it for a year or more, then all that increase in equity is tax-free that you can use for your next project. And it's just a matter of rolling, as you've done, rolling one over into the other. If you've grown something 100,000, you can now buy a much bigger property for that in your next. And then once
Totally.
that grows, you can buy a bigger property. So it's just around properly using your money.
And you know what? It's not a stretch. It's not a hard thing. There's just a couple rules that people have to understand. And the biggest one is that you have to live in the place for 12 months. Period. It has to be your primary residence. So you've got to make sure you change your mailing address so that the mail comes there. And as long as you do that, you don't have to pay tax on whatever benefit that is. And I mean, correct me if I'm wrong. You were in the stock market for a long time. I don't know of another legal way in Canada that you can accumulate that type of money tax free.
Yeah, the only other better way is inherited.
Yeah, yeah.
Like if you can inherit, if you got a rich uncle or something, then that's the best way, right? But if you're left to your own devices,
Yeah.
Um, legally, that's one of the most tried and true. It's not trying to time a market on a stock. It's not trying to time a market on a cryptocurrency. It's fundamentally people need a place to live. And if we're increasing the value in that home, forcing that appreciation, then yeah, any of the growth and any of the passive appreciation is also all tax free if you do decide to sell it.
Hey, Steve, as we finish up here, give me 3 fundamental pieces of advice from your head that you would give to the thousands of real estate investors that watch this show. 3 things that you see people making mistakes with, and help the folks that watch this show not to make those mistakes. What would those things be?
I mean, first thing off the top, I always say is you have to know your numbers, right? So one thing I always, someone mentioned to me one time a while ago, which is do the numbers and the numbers will tell you what to do. And you have to make sure that you know those inside and out. What does the place cost? How much is it going to take to fix? And what your profit margin in there, and make sure you're comfortable. What your lending costs are. If it is a short term where you're not using your own money, you got to make sure those lending costs you understand, because I've seen people that end up underwater and it's one of the tough things. So definitely know your numbers before anything else. For flips in particular, I would say you got to get your trades all lined up. So know your trades, talk to someone that has done it before or that you know. In this case, this other one that we just finished, my brother-in-law is a contractor, so it was great to be able to work with him. He knew the numbers. They matched with what I was looking at and we could work that out. So have the trades all set up from that perspective. And I guess on the third thing, that I would say, just for people to kind of to be aware of is just when you think long term is a flip is one point in time. Once you sell the property, that's it, right? You've got in, you've got out, you've made your money. But again, if you expand your horizon a little bit, think a little bit bigger. If there's a way that you can refinance that, use the money equity tax-free, use it for another property, you're able to expand your wealth. So it's not just now one time, you're not doing this as a full-time job, but you're using the equity you've built to actually build other places, build, multifamily or multiple different properties. So
Steve, thanks so much for being here with us today. Hey,
thanks,
listen,
Ken.
before you go, if somebody wants to get a hold of you for any reason, how do they follow you? Where do you want to send them?
My website is at the realtor stephenmills.ca.
Okay.
But my email as well is Stephen, STEVEN at liveoak.ca. Always happy to chat real estate or any questions that people have.
So friends, we'll put those notes in the show's notes. If you want to check out Steve, if you need his help with a property, go into the notes, get over to his website, make contact with him. And if you're enjoying the No Money Real Estate podcast, then definitely make sure you smash that subscribe button to our channel. If you're listening to this on one of the podcast channels, leave us a review there and watch closely for the next episode of the No Money Real Estate podcast. We'll see you soon.